Good morning, friends, and welcome to the pre-market view. We've seen Santa Claus rally playing out in the global markets, and US markets were up about 0.26 to almost about 1.15%. Nasdaq, in fact, was up more than 1%, and even S&P managed to close at a record high. And one of the triggers was that the Q2 GDP data that came out from US was far better than the street expectations at about 4.1%. which is the highest growth that we have seen in the recent past and was much better than the market expectations, and that led to strong moves across the US markets. European markets too were up about 0.3 to almost about 0.7%. And when we look at the Asian markets today morning, Nikkei is flat at about 0.07%, kind of an upside, whereas Hang Seng is up almost about 0.8%, and even Shanghai is up about 0.7%, and SGX Nifty is suggesting that we are going to open up about 12 to 15 points higher. In terms of flows, FIIs were net buyers in the cash market to the tune of 990 crore. The domestic institutions were sellers in the cash market to the tune of about 247 crore, and in the index futures we have seen FIs buying to the tune of almost about 370 crore. Overall, our markets continue to show a lot of strength in the past 2 days, and there's a feel that given the strong rally that we are seeing in the global markets and the fact that the flows have also continued, there is a case for some more upside. On that note, let me invite Shaival to take us through important F&O cues and ideas that we could have from the F&O side.
Good morning, friends. Let's have a view at derivatives. Friends, in Friday's trade, we have seen that the Nifty ended the session with a gain of around 2%, and which can be attributed to long positions which have built up in Nifty future just before entering the penultimate week of expiry. Now, we have seen that the PCR ratio has shot up significantly from 0.95 to 1.08, as we have seen unwinding happening on the call side, and we have seen addition taking place on the put side. Now, from the current option matrix, it's clearly visible that 6,300 and 400 call option has seen some unwinding taking place, but still it stands with highest number of shares in the open interest. Whereas on the put side, if we have a look, interestingly, 6,300 put option, which is currently in the which is almost at the money, is seen good amount of addition in open interest, whereas 6,100 and 200 strike put option has also seen some good amount of addition taking place. Now, talking about the positional support in Nifty, it would be 6220 on closing basis, but from intraday perspective, we feel that 6340 would be an important support level, whereas 6400 would be the resistance for the market in today's trade. FIs were net buyers in Friday's session, and if we talk about our view, our weekly VWAP is placed at 6220. We are trading above this. Our bias for the market is positive, and for the week, our high range would be 6400. As the broader picture in the market has turned positive, we feel that buying may continue to emerge in the market at lower levels, and from intraday perspective, sale is looking positive, so one can go long by maintaining a stop loss of 70 rupees 65 paisa. Thank you.
Here are the important news and events that we are tracking today. First of all, the Karnataka High Court has ruled a part of the sale of the share of United Spirits by United Breweries Holding Limited to Diageo as void. So this development, which happened on Friday, has come in as a major negative surprise for the United Spirits stock, as this transaction has been held void. Now the management has said that they would approach the Supreme Court against this particular order, and in the interim the United Spirits stock could take a knock, but there is a feel that there could be some amount of a positive upside in the stock if at all it corrects by about 5 to 7% in today's market, because overall Diageo continues to hold almost about 19% stake, and because they are in a hurry to acquire both the management and financial control on the company, eventually there could be some more upside in the stock depending upon at which price the company is able to make an open offer. Also, the fact that if the price at which this particular preferential sale was made, which was around 1450 or thereabouts, if that is null and void, then there could be a new transaction at a higher price, which could again have positive implications for the United Spirits stock. So any particular dip in the stock, one should really look at accumulating United Spirits stocks. Larsen & Toubro's unit L&T IDPL has applied for an approval from FIPB for the proposed FDI, which they are looking at doing. There is another high-profile exit from Infosys, and Mr. Balakrishnan, who was the CFO of the company and heading few verticals like BPO, Finacle, and others, has quit after almost about 23 years of operation. So this is definitely a bit of a negative in terms of the stock price reaction that we could see in today's market. But we've seen that the Infosys has been holding out pretty well. The operational performance continues to be good. So any cut of about 3 or 4%, one should really look at buying Infosys. Petrol pump owners dealer commission has been increased by almost rupees 100 per kiloliter from 1089 to about 1186, which is a bit of a negative for the oil marketing companies. And the new round of NELP oil and gas block allocation is going to begin. And the key terms this time around would be radically different from what we have seen earlier, and the bidder would be asked to quote the amount of oil and gas output that it's willing to share with the government from the day one. So this is an interesting terms that one will have to really take a call on as to how it's going to play out. TRAI has been steadfast in its recommendation that there should be no sale in the CDMA spectrum band during the upcoming auctions, and the CDMA lobby has written to the government that in case the dual technology operators like Reliance Communication and Tata Teleservices would suffer huge losses in case there are no auctions in the 800 megahertz space, along with the sale of 2G waves in January. So this development is a little controversial. If this is implemented, then it could be negative for companies like Arcom and Tata Tele. Coming to the stock specific ideas, ITC is likely to increase the prices of the cigarette brands by up to 15%. So one can go long on ITC with a stop loss of 309 and a target of about 324 to about 331. And for tire manufacturers, negative news as the custom duty has been increased on natural rubber imports to 20% or 30 rupees per kg, whichever is lower. So one can short CEAT with a stop loss of 309 and a target of 294 to 288. JK Tire also one can short with a stop loss of 154 and a target of 147 to about 143. Coming to the alpha delivery ideas that we've rolled out on Friday. First of all, MCX, which is currently quoting at about 460, we had rolled out at 425. We're looking at a target of about 409. The key argument is that most of the controversies surrounding this NACL is behind them. The new promoters are likely to come over, and we've also seen that the margin related issues where the margin was hiked at almost about 15%, they are brought back to almost about 5%. So the CTT also continues to play a negative role, but we think that overall there should be pickup in the volume in the next 1 or 2 years, and once a new management takes over, there could be a re-rating for MCX. So this is a good stock that one can look at accumulating. And the other stock that we have put out is Raymond Limited. We had put out at 267 and we are looking at a target of about 387. The basic story in Raymond remains the same, that their operating performance has seen a good improvement in the last couple of quarters, and there is a possibility of some kind of development of Thane land in the form of either joint venture or disposal, which could again have some positive implications for the stock. So we overall like the stock, which has corrected quite a bit, and now it's consolidating between about 260 and a 270 level. So there is a case for some kind of a breakout on the way up. And the last stock is Tata Global, which is at about 153, and we are looking at a target of about 166. It has emerged as a strong global beverage play, and because of the fall in tea prices, we think that there is a case for improvement in the margins. Overall, a very high quality company, so one could look at accumulating that as well. That's it from all of us, friends. Have a great trading session, and see you tomorrow at the same time.